On Friday, stocks came crashing lower. Are we headed for a Black Monday, or is this a major buying opportunity? Now, we come over and look at all the indices. They were all in the red, but look at advancing issues versus declining. We had 85.7% of issues declining on the day. So we could sense the fear out there, and the fear and greed index almost made it all the way over to extreme fear territory. Now, if we look at the timeline, this is something we talked about in quite a few videos and on the live stream and whatnot. But notice the greed basically topped out on July 3rd. And then from that point on, we've seen the fear and greed index actually making lower highs. And now we were finally able to break. So just if you look at this like a normal chart pattern, here would be swing point number one. Here would be a retest, another retest, and it's only a matter of time before we're about to break. And Friday was that break-in point. However, when we look at the most recent investor sentiment survey, keep in mind the bullishness jumped up this week with a reading of 45.9. So the question is everybody trapped up here at these highs? Because last week, I showed you guys this stat last week that showed in the third quarter, if we were up more than 3%, which we were up 7.79%, notice we've only been up 5 times in October and down 12. So seasonality wise, we're in a very bearish period of time. Now, as we come over and look at how much the S&P actually dropped, the SPY was down 2.79%. And notice on the daily chart, we're starting to get that MACD indicator across to the downside. Now, if we come over and look at the 2-year versus the 10-year yield, we can see kind of flatlined up here, not a whole lot going on. But come over and look at the transportation index versus the Dow Jones. We've been talking about this week in, week out, and it's really been all about the divergence playing out. Notice on the bottom chart, this is going to be the transportation index. And as we saw the Dow in the chart on top continuing to make new all-time highs, notice we kept putting in lower highs in the transportation index. This is a Dow theory sell signal. So that was telling us we most certainly need to pay very, very close attention. However, something that really caught my attention, we talked about this last week as well. We already started to see a little bit of divergence setting up over here on this chart. And this is going to be a chart of HYG versus the SPY. SPY will be on top. But last week we talked about the divergence kind of setting up. And now look, as we scroll this up, we can see HYG, high yield bonds, really starting to fall off a cliff. And really look, we look at Monday, look at where it was right down here. And then look, as we progress through the week, even before we got the big drop on Friday, notice how the HYG was already giving us a clear heads up. Watch out, there is trouble up ahead. And in case you're wondering what caused the sell-off on Friday, essentially China is basically cracking down on their rare earths. And keep in mind, the Trump administration has been trying to make a deal for the rare earths. They're needed for a lot of things. And this could be a problem, right? If China is indeed going to restrict the rare earths, and not just the rare earths, but also the things that are made with them, this could be a problem without those rare earths. How many factory jobs are going to be lost? Something to think about. And once China announced that, Trump comes out and says, well, you know what? We have to recalculate. We are now going to give China a 100% tariff above and beyond what their tariff rate already is starting on November 1st. And then look, there was a major crypto sell-off. There was a lot of accounts being liquidated. If we come over and we look at Bitcoin real quick, look at the massive move that we saw on Bitcoin. Really, all markets out here were absolutely destroyed. But something I was talking about on the live stream, Trump was slated to speak at 5 o'clock all day long Friday morning. I was concerned that Trump was going to start announcing layoffs. And then what do we see over the weekend? The Trump administration fires at least 4,100 federal workers and shut down layoffs now. And the Trump administration has been threatening even further layoffs than just 4,100 jobs at a time when we have not been getting any jobs data because the BLS has been shut down. So are they hiding something from us? And keep in mind, as we come back over and we look at the SPY real quick, up here at these record highs, we saw articles at the end of August talking about record levels of margin debt aren't a red flag, but here's what it says for fund managers. Now, let's think about this. Record margin debt. We have the stock market absolutely at all-time highs. This is 100% a recipe for disaster. Now, some of the targets I've been teasing about over the last week or 2 weeks with some of these other high volume areas that we have on the composite profile, like down here at 642.46, or even down here at 633.76. Now, to put this in perspective, as bad as Friday felt, if we come down to the first high volume node, that's roughly only a 4.68% drop. The next target would be about 5.96% drop, and down towards the next area would only be a 7.71% drop. That would still do nothing in terms of destroy the overall uptrend that we've had in this market. However, when we come over and look at the volatility index on Friday, a massive move on the way up. The VIX was up 31.69%. Now, if you're a bull in the market, you actually like the VIX being up that much, because whenever the VIX is up more than 10%, that indicates that within the next 1 to 2 days, highly probable we are going to have an update in the market, unless the VIX ends up getting parabolic, like we saw right over here in April when the markets were absolutely selling off. When the VIX goes parabolic, all bets are off. And if we look at this historically, all right, the VIX is not that elevated yet. And I wouldn't be looking for a capitulation bottom until the VIX gets into at least the upper 30s. Notice we were talking about this previously, at least on the live streams, and that's the fact that the MACD indicator has been crossed to the upside, and the VIX is just slowly grinding on the way up. And I kept warning people, watch out for a potential volatility spike, and Friday really provided that volatility spike. I want to remind you guys right now, Take Profit Traders having a 40% sale off all their valuation accounts, 0 activation fee. Take advantage of this offer. Use code Epitome at checkout. If we look at the economic data that we had on Friday, we only had preliminary consumer sentiment and preliminary inflation expectation, which both came in better than expected. But here's something we have to worry about. Over the weekend, do things start to escalate? And if you look on Monday, the US has a bank holiday. Now, the markets are still going to be open, but with a bank holiday, we're going to have lighter volumes out there. With lighter volumes, well, guess what? It's a lot easier to push the markets around. We look at the dollar index. Dollar index has been ripping on the way up, but then on Friday, we saw the dollar index starting to crack and actually come a little bit lower. Then we come over and look at the precious metal gold. Gold had a down day on Thursday, and then Friday, right back up. But I want to warn you guys, and I did a video over the past week talking about the MACD indicator. If I simply draw a horizontal line where we are now, and we just scroll this all the way back to the beginning of time, all right, all the way back, the MACD indicator has never, ever, 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 ever been as high as it is now. If I scroll this down right here, now we can see that white line that I drew out. Now, does that guarantee that the market has to go down? No, but it's also showing us that gold is extremely stretched at this point. Now, I want to show you guys something real quick, right? Notice on Friday, only one sector was in the green, consumer defenses, and it was barely in the green, up 0.15. Look at the 1 week performance. One day crashed the whole entire week. We saw consumer cyclicals down 4.68%. Utilities was up, consumer defenses was up for the week. And then we even scroll down to the 1 month performance. Now, previously we had a lot more green than what we have now. Now all we have is utilities, which is a defensive play. We have technology in the green, healthcare. All other sectors are in the red after the price action that we had on Friday. Now, so come over and look at the SPY real quick on the weekly time frame. Notice the MACD indicator is elevated above the 0 line. And now we're starting to get a little bit of a rollover effect. And notice this past week, we end up with a bearish engulfing candle. Now, notice this area on the profile right here, about 613, down here to about 608. We have a minus development area. And also, if we look left, notice that is where a prior all-time high was in the market. Now, if we go ahead and pull our Fibonacci retracement from that swing low right up here to the swing high, notice the 38% retracement is below that price point. A 38% retracement would still be a minor retracement in this market. Now, if we were to go ahead and measure right up here from all-time high down to the 38% retracement, that would give us just shy of 11% pullback. Now, roughly every 12 to 18 months, we'll get at least a 10% pullback at one point in time. Now, if we do jump over real quick and we look at the daily chart, I want to go ahead and throw up some moving averages real quick and notice we're almost back to the 50 period SMA. Now, the last time that we touched the 50 SMA was right here when we gapped over it at the beginning of May. So since the beginning of May until now, we have not been able to come back and touch it. Now, that could be different come Monday, come Tuesday, or later on this week. But we also want to be careful, right? This was a nasty down candle on Friday. So do we maybe start to retrace up here just a bit? Well, before we go ahead and analyze that, let's take a look at crude oil real quick. And this is something I've been warning about for quite some time. We have an ABC pattern down here at 55.27, but Mike, crude oil being lower should be good for the consumer, right? That means inflation is coming down. Hold up, not so quick. When we see crude oil starting to decline, this is a heads up. The economies around the world are slowing down, and China might be that black swan event that nobody thought was coming. Now, if China does indeed move forward with putting restrictions on the rare earths, what do you think that's going to do to inflation? That is going to be a problematic. And then what is Jay Powell going to be forced to do? Keep in mind, on Tuesday, Jay Powell is slated to speak at 12:20 p.m. Now, I'm not sure if this is a pre-recorded statement like we saw last week. And then on Thursday, we have a little bit more news. We have core PPI coming out. We also have core retail sales coming out. And I do not think we're going to be getting the weekly unemployment claims. I'm not even sure we're going to get this PPI data coming out on Thursday either, with the government remaining shut down. Now, keep in mind, regardless of what chart patterns we're about to go over, if they walk back some of the threats, meaning the US walking back some of the threats on China, or maybe even China, relaxing their stance on the rare earths, then maybe we can see the market have a little bit of a move back up. And what would that actually look like? Because on the daily chart, the MACD indicator is crossed to the downside, and we've already identified some of these other high volume nodes as potential targets to the downside. Well, if we come over and look at the 4-hour chart, something I was harping on, people like, Mike, the market only goes up. Yep, it sure did, just like on Friday. But notice we had the MACD indicator peaked out right over here. As the S&P was making new all-time highs, notice the MACD indicator was clearly making lower highs. And again, this was a warning sign. And I'm really surprised in one day we retraced the whole entire move. That really was not on my cards. Now, as we look at this, what are we looking at in terms of where would be a good spot to see the market bounce and potentially reject and start going back lower? Well, for that, on the 4-hour chart, I want to grab my Fibonacci retracement tool. I want to measure right up here from all-time highs, right down here towards the low. Now, if we do go lower on Monday, then we'll simply just drag this down to wherever it is. But at this point, anywhere between the 38 and the 61.8 level would make sense. The 50% level would be ideal as it's right near a high volume node on the profile. However, I am a little bit concerned that the fear may ratchet up a lot more, and we might end up getting a lot more follow through before that actually takes place. Now, if we look at this on the 30-minute chart, notice on Friday, it was just sell, 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 sell. We only had one candle actually close green. Every other candle was in the red. MACD indicator on the 30-minute chart is absolutely bearish, showing no signs of firming up at this moment. Now, at some point, we will get a bounce, even if the market is going to go lower. And notice we were able to close well below value area low, which comes in at 659.42. Whenever we close outside of value, we expect the next 1 to 2 sessions, we come back and visit that level. With the fact that the VIX was up more than 10% is a good indication that we could see the market come back and retest that value area low very, very soon. However, another area that I really like on this chart is going to be this minus development area on the volume profile. That's going to be anywhere from 664.28 up here to about 665.14. Then if I grab my Fibonacci retracement, measure from the swing high right down here to the swing low, notice where that level comes in. That minus development area is sandwiched right between the 50% fib level and the 61.8 Fibonacci retracement level. Now, when we come over and look at the futures markets real quick, look at that. That is absolutely insane on the 4-hour chart. You can see last week we had a 272 point range. We were able to take out this point of control at 65.58. I know a lot of people thought we would never make it back down there, but notice we have a minus development area within this profile. Now, if we do start bouncing on the way up, notice these high volume areas could be points of interest. We just barely stopped before this high volume area down here. Now, if we do start pushing lower, the real threat is that maybe we go down towards this next high volume area at 64.71. Keep in mind, if we zoom this out just a bit, we still have another untested point of control down here at 6,400.75. But we really got to get through this volume area first before I'm going to worry about the point of control a little bit lower. Now, notice on the weekly, we are closing way, way, way below value area low. Now, do I think we're going to make it all the way back up there this week? We may. The rule behind that is whenever we close outside of value, we expect the next 1 to 2 sessions. And since this is dealing with a weekly volume profile, one session would equal 1 week in time. However, I think we're going to have to see a lot of positive developments in order for that to take shape. Now, if we were to pull our Fibonacci retracement just of the last leg down that we saw on Friday, notice where that 61.8 level comes in, right near this next high volume area. But a level I like even better is that 50% retracement, which is also near a high volume node right here about 66.72. Now, if we are only able to trace up towards that area, that could set up a much larger A to B equals C to D pattern on the way down. And if we map that out, that would give us a price completion, notice, almost at that untested point of control at 64.05. Now, still a little bit too early to speculate on that because we don't know exactly how high the retracement is going to be. And do we go a little bit lower before the market actually retrace up? Let me know your thoughts in the comment section down below. On Sunday, are we going to gap up or are we going to gap down come Sunday night for the futures markets? Now, when we come over and look at the daily volume profiles on the 30-minute chart, notice where the point of control is. It is way on up here, 67.92 and a quarter. I don't think we're going to make it up there. And look at where value area low is. We close well below value area low at 66.54 and a quarter. We are able to take out another untested point of control, 65.62. This was an absolutely, seller all day long. No bounces allowed. Now, on this chart real quick, if we can get above this value area low, I wouldn't mind looking for a target up here at 67.08. However, I do want to be a little bit cautious because we can get a massive counter trend rally. However, the fear could also creep up even more, and we can see the markets having a major sell-off. Next week, we're going to be kicking off earnings again, and look at Tuesday. We have Citigroup, we have Goldman Sachs, we have JP Morgan. So we're going to start to see some of the banks report earnings out here next week. Then if we look at the big expected movers out there, ASML expected to move plus or minus 8% on Wednesday, along with United Airlines. Then on Thursday, we get Taiwan Semiconductors, we get Schwab, we get CSX, we get Interactive Brokers. So we're just now getting ready to kick off earnings season. Well, with the banks coming out and reporting earnings out here next week, notice that XLF, MACD indicator, has been looking horrible. And now all this area up here, while the markets were making new all-time high, notice that we actually did not see financials making new all-time high. Instead, XLF, the financials were going sideways, not really pushing the new all-time highs. And then on Friday, we finally get it break much lower. Keep in mind, XLF still has a gap down here at about 50.66. Now, if we look at some of the financials real quick, look at Capital One. Capital One was down 3.91% on Friday. We look at WBS. WBS was down 5.8% on Friday. And even if we come over, look at the AI hype, the leader out there, NVIDIA. Look at the nasty candle on NVIDIA on Friday. NVIDIA was down 4.89%. I want to remind you guys of a chart real quick before we jump over and take a look at the NASDAQ real quick. Look at the 1 month chart of NVIDIA. This is absolutely parabolic and absolute rocket ship. MACD indicator has never, ever been as high as it is now. And a minor pullback would bring NVIDIA down to 152, which at this point really is not that big of a pullback. If we look right up here from all-time highs down towards that structure breakout point, that is roughly only a 20% pullback out here in NVIDIA, and I think it's going to be much worse than that. Now, we come over and look at the Qs real quick on the weekly chart. Nasty bearish engulfing candle. Now, look at the MACD indicator. We're just now starting to want to roll over. Now, there's a couple of areas that have my attention on the Qs. One, the low volume node right here, about 543.37, which is just above a previous all-time high in the market. Then the previous all-time high right here at about 538.52, but then down below that, this high volume node at 519.66. Now, when we come over and we look at this on the daily chart, absolutely getting destroyed. We were finally able to take out that trend line that we had mapped out. MACD indicator did get a bearish cross out there. Now, the question is, are we going to bounce right here into the swing point? And will we bounce up and end up producing a lower high, setting up some type of ABC pattern on the way down? Now, if we look at this on the 4-hour chart, look at the MACD indicator, we can clearly see we had massive divergence out there. Last week, while we were making new all-time highs, look at the MACD indicator. Was it making new all-time highs? The simple answer is no. There was a clear warning sign out here. Now, on the 30-minute chart, notice this was absolutely a bloodbath on Friday. MACD indicator looks horrible at this moment. And here's the real question. Are we going to come back and try to repair some of these structure breakdown points that we were able to break through on Friday? Notice we're closing well below value area low, which comes in at 596.08. And the rule behind that is whenever we close outside of value, I expect the next 1 to 2 sessions will come back and visit that level. However, if the fear continues to run rampant out here this week, then watch out. All bets are off and this market can just go into a free fall. Now we come over, look at the NASDAQ futures real quick. This is an area I kept talking about in last week's video and all week long. Watch out. We had 2 consecutive untested point of controls. And I said, highly probable last week we were going to visit 24,828.75. Not only did we hit that level, we took out the next point of control and we almost made it down to another point of control at 24,073. It was a massive day. Now notice we were able to take out that untested value area high at 24,182. That area was left behind. Now, anytime we leave and level behind for more than 2 sessions, quite often it's going to be several sessions before we come back and visit that. So in this case, we didn't test it on week number 1, week number 2, week number 3, but then week number 4, boosh, right down there hitting that level. Now, notice where the volume profile levels come in this week. Value area high is way up here at 25,054.5. We have the point of control up here at 25,210.5. Value area high is way up here at 25,368. I got to be honest with you. It would be absolutely amazing if this week we see the market come all the way back up and do a volume profile rotation on the way up. However, I would not bet that. I do not think this is going to blow over as quick as some people may think. If we look, this would be a key level I do want to focus on. And that's kind of going to be a minus development area within this profile. Right here, about 24,900 to about 24,986. And if I'm going to try to target either this zone or value area low from last week, then I really want to dive down and start looking at the daily volume profile levels. Now, notice we were able to close below value area low at 24,864.5. So in the event that we get back above that price point, that's really when I want to start trying to target that minus development area and then potentially all the way back up here towards value area low. If we cannot get back above the daily value area low, then there's no need for me to worry about any higher prices. Until we get above that price point, I'm not going to be overly aggressive on that. Now, on Sunday, if we do end up getting a massive gap down, I may end up trying to buy the gap for a little bit of a bounce up, and we'll have to see how big the gap is and just how that plays out. Keep in mind, if we start to get positive developments with China, with the US, then we are going to be in for one heck of a rally on the way up, because that's a lot of destruction. Look at all the trading days we were able to take out in just one fell swoop, just one swipe at it, boom, right off that. Now, I got to warn you guys, a lot of traders are going to be looking for the market to counter trend on the way up. I want to caution you on that. Be very, very careful. Now, if we were to pull a Fibonacci retracement from the high on Friday all the way down towards the low, notice where the 38% level comes in. Right here about 630, and that is just below value area low. So does the market come up towards this area and then maybe set an ABC pattern on the way down? If we breach this level, the next stop would be right here, right around the 50% level, and then the 61.8 level coming right in that minus development area. However, with the banks being closed on Monday, is that going to be good for the bulls or is it going to be good for the bears? If you guys want to learn how you can quadruple your payouts with the new My Funded Futures payout policy, make sure to check out this next video right here.